You are listening to the Success Leaves Clues podcast,
where we're having conversations with regular people doing outstanding and legacy-changing things in corporate America and entrepreneurship.
If you're looking for the blueprint to help you make less mistakes on your journey to freedom and ultimate purpose, then this is the podcast for you.
And now, here's your host, Dr. K. Dr. K.
I'm blessed to be here today with Lindsay Smith. Lindsay, the agent, as she may better be known as. Look, we're going to have a conversation about something that is not sexy for most people, and that's life insurance. I don't know why so many people skip over this aspect of their life. They got, car insurance, all these different other types of insurance to protect themselves. But I think we live in an age of like GoFundMe. I see it all the time, and I've even been impacted in my own family. So can you tell me a little bit about yourself and why life insurance is your go-to?
So just to give you a background on myself, I went to Howard years ago, many moons ago.
Okay, HU.
The real HU.
Yeah, the real HU.
A fake one, right? And I originally started out in the entertainment business. And then back in 2009, I decided to get into this business because obviously we went through the recession, things were different, and I've always been into finance, right? So I went to the School of B at Howard, ended up graduating from Baruch School of Business, Ziegler School of Business. So I've always been into the whole finance aspect of just trying to understand, how can I make money? How can I keep money? And so when they reached out to me about becoming an agent, at first I was like, I don't want to be an agent. It's not sexy, especially it was kind of like, I kind of want to hide. I don't want to tell anybody this is what I do. Because, you always hear these stigmas about life insurance and people who are life insurance agents coming, harassing you. So I was like, I'm flying in that. I don't want to do that. Right.
Yeah.
But I went for the interview and I actually was really intrigued about the whole process and what I would learn. And so I got into the business officially in 2010. So I've been a life insurance agent since 2010. I also have a securities license. So I have my 6 and 63 as well. I have my health license as well. So I'm licensed to not just sell life insurance, but also, long-term care, disability, all these other things. And then obviously, mutual funds and things like that as well.
All right. So typically, does your policy not already include something for disability or health already?
So it doesn't actually include it. You can add it to your policy. Okay. You can add a disability rider, and you can also get a disability policy. And I like to make that clear with people. That's not the same thing. A disability rider, when people say, I have a waiver of, the disability waiver on my policy, that's really just saying that if something does happen to you, and you become disabled, the insurance company is going to pay your premium for you. They don't give you any actual money. They just pay your premium for you if you qualify for that claim. But disability insurance is different. That's when you are not going to work or you're going to work only part-time now because you have a disability, whether you can't work because you broke your legs and your security or, depending on what happens to you and what's deemed as a disability.
Got you.
And the disability policy actually pays you out of income. Disability insurance pays you out of income. So it replaces your income. So it's there for people who want to make sure that if something happens to them and they don't get their full income at work, that they have something else to help them pay their bills.
Yeah, so that's good. A point that you point out the difference between those two. But does that mean that it's going to sit in like an escrow somewhere and they're going to pay you out your income like monthly, or they're going to give you the full amount and you got to kind of manage what your disbursements are going to be?
So no, that's not how it works. Really what it is that you pay a premium, and for that premium, they give you a percentage of your income. Typically, most disability insurance companies are giving you between 40 to 60% of your income. So if you make 100,000, depending on what your occupation class is. So in the insurance world, they're going to deem your occupation a certain class. So if you're in a riskier occupation, like maybe a corrections officer, as opposed to I'm an assistant and I sit behind the desk all day, the risk class is going to be different. The occupation class will be different. And so they may give the person they will give the person who's like an executive at a company that sits at a desk, they're going to give them maybe 60% of their income when you, as the correction officer, may only get 40%. So you got to tell them how much income you make. And sometimes they verify it. They don't always take your word for it. Sometimes they will get your tax return. And so once they verify what your income is, then they give you that you can get up to that percent. So of course you got to be able to afford that amount. So sometimes you may not be able to afford the full percentage that they're allowing you to get. So I think that when it comes to disability insurance, it's excellent for risk management, but it's not 100% of your income. And usually because your job may give you a percentage also, right? So if you have a job, you may get some sort of percentage anyway, but definitely if your job does offer you some sort of disability, they want to know that too, because then sometimes they give you even less.
Okay. All right. So you can't kind of double up.
Yeah. You're not going to be able to get like two. I mean, not legally. No, you're not going to be able to get two disability policies, one doing 40% and the other one doing 40%. Because if you apply for disability insurance, they want to know if you have any other disability insurance.
All right. This whole conversation about insurance, and you're so knowledgeable and it flows out so naturally for you. But you said this wasn't your first choice. So initially you were going to the School of Business at Howard. What was your initial goal or career path?
I thought at first I wanted to do marketing. So I was thinking like advertising firms. I actually interned at one and it was really fun. They were actually putting together a plan for like Amtrak and Coca-Cola. They were a really big firm, Leo Burnett at the time. And so they had big clients and it was like this big thing to set it up. And I was so excited. I thought I wanted that, but I realized that I didn't want to work like a 9 to 5. And so I started working for Vibe magazine years ago, I think 2001, 2000. I was an intern there while I was in school. And that was more exciting to me. You know, we did marketing in a different way, you know, and so that was something that was more exciting to me. I got into product placement, which was where I used to give celebrities clothes to wear for like videos, award shows. So brands would pay me and I would give them the clothes and make sure they wear it, you know, on the different TV. Because that was before, that's how they paid for marketing. It was like you paid me. I had the contacts. I got them to wear the clothes and you got the picture for for your marketing. So that's what it was, you know, before we had Instagram and all of that. Yeah. So, you know,
it was still like influencer marketing, but it was just done in a different way.
Right. It was done in a different way. And, you know, back then the companies had really big marketing budgets. They used to spend a lot of money on marketing budgets. And then, you know, when the recession happened, that's the first thing they cut back, which I never could understand. Because just think about business. For you to know the product that I'm selling, I have to market it, right?
Right.
So if you cut back on the marketing budget, you're cutting back on the amount of people who know about the product, but you still want the same sales or more. So it doesn't make sense. But companies always cut their marketing budgets first. It's one of the first things. They were like, oh, let's cut it out. Stop giving away so much product, right? And so it became difficult. It was like way less product to give away. And things just changed, right? So when they called me about this opportunity to get into the business, I was like, let me take a shot at it. I've always been into knowing about the inner workings of money and ways I can do, I've always been into trying to find ways, to make money. And so I felt like this was something that was educating me, but also allowing me to take this information back to my friends and family and say, hey, we should be doing X, Y, Z. We can, this is how, and, this business honestly it's not a lot of African Americans in the business. It's not a lot of minorities in the business. And so it's not a lot of females in the business. And so it was definitely a business where you felt like they don't want to do business with me, right? But I was like, I'm going to make my own presence and deal with my own people. And not that I have a problem with dealing with any other people. I don't. It's if they have a problem dealing with me, and I did feel when I first got into the business that's what, the minorities was one set of people, and then it was them. And it was like, they were like, I felt like they didn't really want to tell us the same information. And then they had to, because when you start being successful in the business, you get invited to the meetings that they're at. So now I'm in the room with you while you're doing the presentation. So now I hear you, and I'm going to share it with my people. Right?
Yeah, I'm picking up the information. You talk about sharing it with your people, and you do that a lot on your social media platforms. And the biggest way you do that is right now I'm seeing in the background, you got, what is that behind you? Life insurance.
But actually, I have the book in my hand. I always have my book with me, right? So it's Creating Wealth Through Life Insurance. I authored this book. I'm going to say this. Typically, when you look up life insurance, things are very complex. It's not simplified. It goes over our head. You're like, what are they talking about? And there's reasons for that, because the companies with compliance, they really want to monitor how you explain life insurance, right? To protect themselves. And obviously it protects you from getting, a lawsuit on somebody misunderstanding, right? Yeah. So what I would like to say is I wrote this book to simplify understanding life insurance for people to get a better understanding of the different options available to them, for them to also have an understanding of figuring out what policies work best for them, how they can use the cash value as a financial tool, and that life insurance is not just a death benefit, it's also a living benefit. If you purchase the right policy.
Hold on, that's a lot. The life insurance is you're saying like a wealth building tool, or?
Absolutely.
Do me a favor, hand me the book.
Here you go.
Thank you. All right. So look, I appreciate it. So I got it right here. So it's got a ton of information. Like, I've got life insurance because I know it's something that you're supposed to have, right? So I've got a policy, you get the employer policy or you get a term policy. So, I went with the term policy because I felt like it's one that I can control or have myself. But reading through your book, I'm like, oh, man, I didn't even know some of this stuff existed. Mm-hmm. So why isn't anybody, like you said, sharing that information with us that we can even know that this is a possibility?
I feel like they make it seem like life insurance is some sort of secret, like it's not meant for everybody to understand how they can really use it. I think they do push out a lot about getting a term policy. And they push it out because they're saying, well, it's cheap. But, as minorities, we spend a lot of money on things, right? So we can afford to spend our money on things if we knew what the value was. When we go and we buy that Chanel bag or we go and get those Louis sneakers, it's because we feel it has value and we put our money behind it. So what if we knew the value of life insurance? How would that really change our community? Just think about that. Because if when we pass away, there's money left behind tax-free to our families, how would that change the dynamic of a family? Instead of us having the story of we passed away and we left our kids with nothing, debt, scrambling to find money to pay for the burial, first off, And then not even paying attention to the fact that after you die, we still got these bills that come in every 30 days. Mm-hmm. And we no longer have your income. What if we change that? And now every time somebody in our community dies, $1 million tax-free money was left behind. Oh. Do you not think that we would start owning things? Oh, we absolutely. Would own more property. We will be out of debt. We would have better credit. You know, we will be able to start businesses for all different types of things because we're creative people. But sometimes the banks don't understand that creativity. So they're not giving you a loan. And if you're in debt so high, you're not going to get a bunch of new credit cards because they're not going to approve you because you owe so much money. So imagine what $1 million would do every time one of us passed away. It would completely change where we can live. It would change what we have. It will change our kids' futures. It will keep our kids out of student loan debt. And this is what the other communities are doing. And it's not a secret. It's just that we think of insurance as a scam. You know, I hear that all the time. Oh, it's a scam. I just think generational, right? So if your parent thinks it's a scam and all they do is say, oh, don't get no life insurance. You don't need that. It's a scam. When you grow up, you're going to just repeat what is said, right? So it's going to be the same thing over and over from generation to generation.
It's the miseducation in our community is just being passed down generation to generation.
Absolutely. So I just think that is that. I think it's passed down. I also think that we listen to anything we see, right? It goes up online. It's gold. It's like God said it. You know, and it's like, did you
with no fact check or nothing. They just
nothing. And just think about all the people giving finance information online. Half of them have no license. And I'm not saying that if you don't have a license, you are not qualified to share information, because there's some people who don't have a license who know more information than somebody who has a license, especially when we're talking investments, you know, life insurance, things like that. There's people who understand and have studied it. And so they understand. But you also have to be careful of the people who are just repeating things that they don't understand. Right. So the other day, yesterday, I think Trap put up a post about this. It was this guy who was talking about life insurance, and he was saying that whole life is a joke. Don't get it. And that did you see the post?
No, I didn't see it.
Okay, so it's all over the internet now, right? Yeah. And so a bunch of people DM me and was like, what do you think about this? And it was saying that whole life is a scam, that if you pay into a policy for 2 years and if you just pay into it for a couple of years and you let it go, that you don't even get your money back. So I'm like, well, listen to what you're saying. Whole life, which is a product that is for your entire life, that you're supposed to keep long term. Mm-hmm. You're telling me that you got rid of it in 3 years and wondered why you didn't benefit from it. Well, you didn't use the product the way you were supposed to. Of course, the insurance company wins when you pay your premium and then you lapse on your insurance before they got to pay out the death benefit.
Right. It'd be like a car insurance policy. You lapse on your premium and then you get into an accident. They don't pay out. You say it's a scam. It's not a scam.
It's not a scam. You didn't pay your premium. You didn't do your part. So it's a contract. When you get life insurance, it's a contract. And it clearly states in the contract what you have to do, which is pay your premium. That's all you have to do. Pay your premium and not lie about your health when you're getting this policy. That's it. Besides that, as long as you follow those things, you're going to get your payout. You're going to have access to your cash, everything. And so he was saying that you shouldn't get it because of that. And you know, because these videos get millions of views and then you have people who listen to them and they're like, I'm not getting it. It's a scam. Why is it a scam? Because he said that when 3 years happened and he took the money, he wanted to take the money out. They didn't give him the money because he didn't barely have any cash value. Well, one, you got a small policy. So when you have a small policy, it's not a lot of cash value in the first place. right? If you're paying $25, $50 a month, don't expect hundreds of thousands of dollars in cash value. People just have to think about being realistic.
Yeah.
Right? And then at the same time, if you lapse on a policy, then why would you receive anything? I mean, I don't know. You didn't hold up your end. And don't even get me wrong. In a whole life policy, if you lapse on it years down the line, there's cash still there for you. You can end your policy and take what's built up so far.
So it depends on the policy, and like you said, the terms of that policy, on how long that's going to take to kind of mature before you can get something out of it. Well,
no, it's more about if you have a whole life policy in general that builds cash value. Your cash value bills based on the amount, the face amount you have. That's how you know how fast it's going to build, right? And so if you have a policy that's building cash value, but it's a small face amount, it's going to build slower than a policy with the larger face amount. And if your premium is low, it's going to build slower than a policy with a premium that's high. And so there's some policies that have cash value in year one. So if you didn't pay your premium and you decide to close your policy down, less any fees that they take out, you'll get whatever's left.
Makes sense.
So the policies are meant to run a certain way, and just because they don't run the way you would like it to run doesn't make it a scam.
Yeah, that's a key point right there. You don't make the rules and to decide if it's a scam. It's working the way it was intended to work. You're just not doing it right.
You're just not doing it right. I mean, what can I say?
Yeah. So what's the best way for people to get this information? Because there's so much misinformation out there. Like you said, they could be scrolling on TikTok or something and they see the latest, so-and-so who's just disgruntled, and everybody can't talk to you. So how do they get this kind of information and we change the culture of the community?
Well, definitely. That's why I wrote the book, because obviously I can't speak to everybody and break it down to everybody. So I break it down in the book. I break down the types in the book. I break down what to expect for underwriting, what to expect for writers, what to expect as a business owner, and I give scenarios of people who had insurance, people who didn't, even comparing, a lot of the big question that people always ask is, why don't I just invest in the market instead of insurance? So I break that down in the book, because insurance is not an investment account. I'm not saying that it's not a type of an investment because you're putting premium into it every single month and you're going to gain something out of it eventually, right? But it's not an investment account. Of course, there's policies that do have an investment account in it, like a VUL, but in general, the fixed products are not investment accounts, so they don't work the same.
Okay.
Does that mean that we don't build money in it? No. But it does. It doesn't work the same. It's not dollar for dollar. When you have an investment account, if I put $10,000 in my investment account and it gives me a 10% return, less whatever fees, I'm going to have $10,000 plus 10% interest, less the fees. Right?
Yeah.
I have a life insurance policy and my premium for the year is $10,000. And let's say I'm 30 years old, I may have a $1 million policy, which means if I die tomorrow, check the difference. If I die tomorrow with the insurance policy that I put that $10,000 in, my family got $1 million. If I die tomorrow with the investment account, my family got that $10,000 plus the 10% interest, less the fees.
Less than $1,000. Yeah, no.
So I mean, it's not the same, right? So you're paying for the death benefit, while in addition to it, you're also building cash value. So you're getting the best of both worlds because it also transfers tax free, right? Whereas investment accounts, you're paying capital gains tax on.
Right.
So it's very different, and it's two different ways to save. It's not an either or, it's a do both. people are always trying to like compete with investments, right? They're like, well, this investment account is the best, or this type of, you should do crypto, not regular, not stocks. You should do bonds, not CDs. People always want to compare what you should do, either or. You really in finance have to look at what your goals are, what you're trying to do, not what everybody in the world, not all the noise. What is it that you're trying to do? And you have to find the products that give you those results. And usually it's not just one product. Because if there was one perfect product that just did everything perfectly for everybody, everybody would just have that one thing.
Yeah, there wouldn't be so many options.
That's why some people do Forex, some people do crypto, some people do paper stocks. Some people do it all. They want a little bit of it all, right? But it's not a either or. It's like somebody telling me, oh, don't buy real estate, just get insurance. Why? Why wouldn't I want real estate and insurance? Like, I don't understand. Why? Yeah. I want real estate and I want insurance and I want a stock portfolio and I have crypto, right? So, and I don't do Forex just because I don't understand it. But there's people who make millions from it. They understand it. I don't get into things that I don't understand, right? So as long as I don't understand it, I'm not doing it. Doesn't mean it's not a good thing. And I'm not going to tell you not to do it. Do your research and decide if that product makes sense for you.
What about the other side of the insurance industry? And you've got a lot of different license and credentials, from the Series 6, the 66, and all this stuff. Somebody who's looking at life insurance now from the perspective of they want to follow your footsteps and be successful and be an agent, what's the best path for them to do that?
So, first off, I think for agents, if you're interested in getting in this business, which I have to say it's a really good business, but I will say that it's for a certain individual. And what do I mean by that? Before you go through the whole process, think to yourself, are you a salesperson? Because although life insurance is a necessity that people need, it's still sales, right? You still have to be able to be relatable to people. You have to be able to listen and hear what it is that they're looking for. You have to be able to present solutions, and you have to be able to really take the time to learn the product so that you can explain the product. Right. Yeah. So in those situations, I think if you realize that you're a person that does well with people, who will talk to people, whether you know them or not, and you're totally fine with rejection, don't take it personal. If you're somebody who takes rejection personally, this is probably not going to be the business for you. Right. Yeah. Now, so to get into the business, you have to take a state exam. Whatever state you live in, you're going to take the exam in that state. You can do it through a company where you can get signed up and they will sponsor you for the exam and help you learn. They'll teach you the information, or you can choose to go sign up yourself. But then when you do that, you have to get your license appointed to sell. What do I mean by appointed? I mean that you have to sign up with some insurance companies, most likely a brokerage, that will appoint your license so that you can sell through them. Okay. And you then can still sell to different companies depending on what company you sign up with, right? So sometimes you sign up with companies that only sell one company, and some you sign up with have multiple options. You have to decide what kind of agent you want to be. Do I want to be captive or non-captive? Captive means working for a company that only allows you to sell from them. Or non-captive, and also in captive companies, a lot of times they keep your book of business when you leave.
Wait, hold on. So you do all of this marketing, like you said, you got to be sales, you deal with all of this stuff. And then if you leave, everything that you've built stays with them. So you have no ownership in that?
Exactly. If you go with a captive company, right? Okay. So if you're non-captive, then you take your clients with you. You still continue to get your residuals, and you also, can just move on and be selling at a different brokerage, a different company, or whatever it is that you want to do. Okay. But the thing about being captive, and I will say this, a lot of times the captive companies, because you're kind of an employee of theirs, they do have better training than most, going to these other companies where you kind of could just do whatever you want because they're controlling you, right?
Yeah.
So they want you to be successful because you're only selling their products.
Yeah. So that's the
So they do
trade-off.
a lot of product training, so sometimes in the beginning you may want to go with a captive company, maybe for the first year, just to kind of learn some tools for you to be successful. I did it. I was in a captive company for 10 years, but after I think year 3, I was allowed to start doing brokerage business. And I started doing that in addition to me being captive on that side. And with that captive company, they kept my clients that I did with them.
Okay. So you almost had to start your business all over after 10 years.
No, because all of the broker business was mine. So while I was with them after year 3, I started building my broker portfolio. So I kind of just left behind the clients that I only did with them. And what I did in most cases was I wrote them on the broker side too. So then you were my client anyway on the broker side.
Oh, that was smart.
Yeah. I figured it out. I planned before I made my exit.
Planned ahead, yeah. All right, good transition.
Yeah, absolutely. So, I think, go ahead.
No, go.
No, so I was just going to say that I think when it comes to insurance, there's a lot of myths, right? A lot of things that people think about life insurance that's not necessarily true. And I think that if we are more educated on life insurance, that a lot more of us would get life insurance. And if we really understood how life insurance can be such an integral part of our financial portfolio, like really holding things together for us, even doing a tax-free retirement income out of it, scaling our business, using the money to scale, using the money to create a real estate portfolio by borrowing from our policies and using it to buy real estate. I do want to say this, though, because online, because it's a lot of times a very short period of time, we don't explain. And I think people get misled because when I'm saying these are some things that you can do, not everybody can do it, because if you don't have a policy that's sized, big enough to have those type of cash values, then you're not going to really benefit the same as a person who has a larger policy. So I do want to tap back into the guy who had the video. That's something that he was saying, was that most people don't even have the face amount for them to even do all of these things that people talk about you could do, which is like the income, using it to scale your business. And it's not that people can't do it, it's they're doing it at the level of the policy they have, right? If you have a really small policy that's building really small cash value, then that is the level of money that you're going to have access to. It's just like when you have a savings account, if you put $5 a day in there, it's going to be very different than somebody who's putting $10,000 a month.
Oh, yeah, absolutely. So it goes back to proper planning and having the right broker or agent on your side to help you get the full picture. Mm-hmm. Because if you've got a strategy in your mind and you don't convey that, with the agent, you're not going to get the result you're looking for.
And depending on the agent you get, unfortunately. I mean, some of these agents are strictly sales.
Okay.
But they don't do too much educating, the client. And so they kind of just push the product on you. I tend to stay away from that. Mm-hmm. I tend to really kind of educate you, and let's just kind of discuss what it is that you want to do. And I'll tell you if it's possible with what we're working with. And I'm going to be honest, because I don't want you to call me 5 years later saying, hey, you told me if I had this policy, I was going to have cash value. I recently was talking to somebody and they basically said to me, they were like, hey, Lindsay, so I'm planning on buying a house in a year. And so my reason for getting this policy is because I want to borrow $200K from the policy for my down payment. I was like, oh, okay. So what's your budget? About $100 a month. So I was like, well, I would really love to find a product that we could put $100 in for 12 months and get 200K. If we find that product, I would like to join that one myself. Yeah. But that's just not reality, right? And so sometimes you have to say to them, think about that. You're saying you're investing $1,200 and you're looking for $200,000.
Yeah, I guess when you hear it out loud and you let it sink in,
you gotta say it to them. You have to say it to people so that they can understand that it's not the life insurance that's a scam.
Yeah,
it's what you're trying to do is a scam. That would have to be a scam, right? Yeah. And so I said, I break it down nicely, and I'm not sarcastic. I definitely will say, that's just not realistic. The death benefit is not the cash value. And I think some people do get that confused. They're like, I'm going to buy $1 million policy because I want to have $1 million. Okay. Totally. And we can do that. But how much time you got? Right? Mm-hmm. We can buy $1 million policy. Do you got $1,100 a month? No. Oh, we can't do $1 million policy. How old are you? Right? So these are the things, I get people all the time. I want to get $1 million policy. I want you to have $1 million policy too.
Yeah.
But if you want $1 million policy that builds cash value, not a term $1 million policy, I could get you a term $1 million policy if you're 30 years old and healthy.
Yeah.
I could get you, and you're a female, I could get it for you for $25 a month. But that doesn't build you any money.
Right. That's only good if you pass away and you want to be here.
It's a death benefit. It is strictly for you to leave that for somebody else to benefit.
Yeah.
That's the purpose. So if you're looking to have $1 million policy that's going to build you cash value, which will eventually get to $1 million in cash value years down the line, we're going to need a little bit more of an investment from you, a little bit more premium. Because even at 30, you're looking at probably about 7 healthy individual female, still 700, 750 for $1 million, and it could range from company to company, maybe between $700,000 to $900,000. I mean, $900 a month, but it's an investment that you're going to put in to get these type of numbers.
Yeah, it's
possible. We do it. I have one, right? But I'm paying. I'm paying some money for it. It's not $100 or $2 or $3 or $4 or $5, right? So that's what I really want to explain to people. The value you get from life insurance. The value you get from life insurance depends on what you're willing to sacrifice, what you're willing to commit to financially. And do me a favor. Do not get anything you cannot afford. I don't want you to lapse because you don't win when you lapse.
Right.
You give money to the insurance company and you don't get what you need in return if you end up lapsing. So one of the key things in finance, you have to do a budget. This is a long-term, this is a policy you're going to have for years.
Yeah, it's the consistency that builds the value.
Exactly. But and if people would understand, it's the consistency that builds the value in everything, in business, in stocks, in life insurance. Life insurance is no different. It's the consistency of doing the same thing every month, paying a premium every month or annually, however you're going to do it. It's that consistency that gets you to the goal. We can't do things for 2 months and ask people why things are a scam. That's like the people who invest in the market and it was doing really well. And then when the market wasn't doing well, they're like, this is garbage. Why? It's not garbage. It's been making people millions of dollars for years.
Oh, yeah.
Right? You just not doing your research and paying attention to the full picture. There are ups and there are downs in the market. And only the strong survive in that case.
You got that right. Hey, Lindsay, thank you for being transparent and really dispelling what people might believe and setting the right expectation, right? Because if we want people to be successful and we want people to start utilizing and leveraging some of these, systems and investment vehicles that the wealth they're using, but they might have the wrong, impression of what's needed.
Mm-hmm.
But you talked about dispelling some of the myths, and in your book, you talk about several myths. Can you tell me a myth that comes up a lot to you that you could dispel?
Absolutely. One of my favorite ones are the job insurance, right? Do I need insurance if I have job insurance? A lot of people feel like, oh, I don't need insurance. I got job insurance. And what I want to be clear is, don't get me wrong. There are some companies that you do have insurance that you can take with you when you leave. When there's companies that come to your actual job, or, it's through the HR where they sign you up and and you're just paying your premium through the job. Okay. And so when you leave, you can switch it from them paying it from your job to them paying it out of your bank account. Yes. But even with that, it's limits. Whenever you sign up in a group, there's going to be a limit to how much they're allowing the group to get. And so you may not have sufficient insurance from getting insurance from your job. The other part about the job is most people have a group plan, which is a group term. And it does, and people say, well, how can it be a term because it doesn't have an end date? Well, it's not that it doesn't have an end date. The day you retire is your end date. It ends, right? Or the day you get laid off, it ends. No, not like a regular term policy that you get outside the job where I tell you up front, it's 20 years, it's 30 years, it's 10 years. No, it's not the same as that, but it is a term, meaning when you leave this job, you're not, unless you die while you're on the job, when you leave this job, you will no longer have this policy. And guess what else? If I started the job at 30 and I left at 65, what is my issue? I am older. So when I come get my insurance, I'm now 65 years old, trying to get insurance policy. I may have health issues, and I'm for sure paying a lot more money because of my age.
Yeah, now you've got the underlying conditions.
Exactly. And so you're paying more money for those conditions, and you're paying more money because of your age. So now you'll get a lot less insurance for your money than you would have at 30. So I feel like job insurance is like this placeholder that has people feeling like they're safe until they leave the job. And now we're talking about the millennials who are changing jobs like they changed their clothes. So they're not even staying on a job like, at least the older generations used to stay at the job for 30 years and 40 years. But that's not the case. I mean, as soon as they go to work and they don't like something, they're quitting. They're like, I'm done with this.
Yeah, they go on.
It's an entitled group of people. And I'm not mad at them because they now have opportunities to make money so many other ways.
Yeah.
They can just go online and decide to be consistent and sell an ebook and become a millionaire, right? So because they have these opportunities, they're quick to quit on a job that they're not happy with. Yeah. And that's great because people who are my age for years were scared to leave their jobs when they didn't like it, even though they hated it, just because they were in fear of not being stable.
Yeah, living miserable.
Right. So I think the job insurance, I want everybody to know that if you have job insurance, you still need insurance outside the job. You still need to make sure that you have 10 times your income at least in insurance, which a lot of times your insurance at work is just 1 or 2 times your salary. They may give you a $300,000, $400,000, $500,000 policy, but you're not getting $1 million policy at work for group term. Now, don't get me wrong. There are some top execs that as an executive bonus or as a company bonus for you being an exec, that they're purchasing permanent insurance for these executives. There are some. I actually had a client that was an attorney for a major corporation, and his company brought him, I think he had like $1.5 million in universal life that they paid the payment for. But it required, it comes with rules, right? You got to stay here for a certain amount of time, different contract rules, and it's incentives to make people stay at the job longer. So I'm not saying that there aren't jobs that have that, but if you have a group term policy. Please get your own insurance so that it doesn't matter whether or not you stay with the company or not, on whether or not you have insurance.
Bam, another myth dispelled. Lindsay, I got something I like to do on every episode. So the name of the show is Success Leaves Clues Podcast. So I like to point out a couple of clues that I picked up in your journey that helped you be successful. And I'm quite sure the listeners will pick up some other things. So one thing I see in you is a lot of courage. Like, you weren't afraid to step out. You made a couple transitions, not only from your business and marketing, career, stepping into the financial industry, but even in that, you were willing to leave behind, some business and a book of business to go on to the next level. And I think it's really important to have that level of courage.
That definitely is courage.
Another thing that I see in you is your willingness to give back. And it's really awesome to give back to a community when you can have this knowledge and you can be wealthy and as successful as you are and just go on and keep going down that path. But you're writing, a book like Life Insurance and giving back to people and, coming on a show like this and sharing with people so they can be educated in life insurance and also have, some of the same investment vehicles you have.
Yes, thank you. Wow, that summed it up. Yeah, I mean, I definitely feel like that is this career is very fulfilling. Yeah. It's you owning your own business. I mean, you're in control of you and your success in this type of business. You decide how to market you. I mean, obviously there's compliance and there's things that we can and cannot do, but overall, being able to market myself on social media, I love that I'm able to just connect with so many different people across the nation. My clients are across all the states. And I think that being able to just really educate is, even if you don't get insurance with me, that's okay. The goal is that we get insurance. The goal is that you understand the insurance that you have and how it works for you, because that's the key to knowing how it could be a financial tool for you, is for you to understand what you have. Because even I have clients that come back to me that I did 10 years ago, and they're like, do I have the policy you're talking about? And I'm like, yes, I have it already. Right? So I think understanding, educating yourself, definitely read my book. It's available on Amazon, creating, I can't even think right now.
Creating Wealth Through Life Insurance. Here's the book. It's gonna be linked in the description, and we're gonna make sure we get this in as many hands as possible.
Yes, definitely. And so, I think that's why I created the book, right? I want to be able to get it out to as many people as possible. Tell a friend to tell a friend to read the book so that you guys can be informed as well and understand what you have. Review your life insurance. I've seen so many times people tell me, hey, I have a permanent policy, I don't need any insurance, and they pass away and they have nothing because they had a term policy that expired. So please review your insurance, understand, change your beneficiaries, keep them updated. Don't have your beneficiaries your ex-husband that you had 2 husbands ago, and now you pass away, right? And your family doesn't get the money. So, there's so many things to be mindful of with life insurance. And, people, of course, will call that a scam. Like, I couldn't get the money from my husband. Your husband didn't change the beneficiary. Yeah. Right. So, like, these are different things that they're not scams. You just don't understand what's happening and you're not taking the correct steps. And so my book goes through all the steps you need to understand. I talk about beneficiaries. I talk about ownership of the policy, what that means. I talk about the types of insurance. I talk about what it does for you as a business, buy-sell agreements, just so many different things, even understanding, the taxes. And I can't give tax advice. I'm not a CPA. And everything we talked about on here is for informational purposes only. I am not recommending anybody to get any particular policy. I feel like you have to talk to a licensed agent about your individual needs. before you get a recommendation. I am not telling you that term, whole life, universal life is best. I'm just educating you on what it is. Yeah. You have to do your research and talk to an agent and find out what works best for you.
Absolutely. Thank you so much, Lindsay. I want to remind everybody out there, if you can dream it, you can achieve it. Until next time.
Absolutely.
Thank you for listening to another episode of the Success Leaves Clues podcast.
Be sure to follow Dr. K on Instagram at Dr. K Washington or the podcast page at Success Leaves Clues Podcast. We'll see you here next time.